Stock of the day, though, thought we'd have a look at Credit Corp. The Aussie debt buyer announced their FY23 results and dividend distribution. While the debt buying segment is seeing low market volumes, the lending side is experiencing a strong surge in demand. The company reports FY23 earnings, total revenue 4.11 million, NPAT 96.2. According to the report, US purchasing conditions provided a solid FY24 pipeline, and their guidance reports estimated ledger investment between $200 and $250 million, net lending of $45 to $55 million. Gary Glover, what do you think of the Credit Corp result? They gave a weak guidance a couple of months ago, didn't they?
Yeah, it's funny actually. I covered this one actually a few times here actually on the trade over the last couple of months. It's actually been one stock that I have been long here, just because I really like the technical setup. Also like the sort of I think the sort of shift in the cycle and the sort of debt markets as well. So you got to kind of look a little bit forward in the track here. But I was sort of lucky enough to take my profits off the table here around that sort of 22.50. Most of it there had a very good position there, but I still think this is going to be the revenue line was still pretty strong, but obviously the NPAT down this year. But I think that will improve. The company's talking about sort of better guidance moving forward. But I still think the cycle is going to be on a positive trajectory here moving forward. So I do like this stock here. I'd just be probably waiting for lower levels. I think technically I sort of exited around that sort of 22.50, 23 zone, just because a bit of a sounds funny here, but like a Elliott wave sort of pattern there, just looked a little bit long, a little bit overstretched. So I'd probably be looking for a re-entry closer to $19 there to come back there. So got down to 20 today. So watch this closely here, but probably happy to go back in here, but probably just a little bit lower.
Okay, so if you're in it, hold it, but worth a buy around $19.
Yeah, 100%.
Okay. Rudi, what do you think?
Oh, you're going to get a lot less detail from me. No, I'm not very excited with Credit Corp. I think it's, and today's guidance proves that. Result is below expectations. Had to cut their dividends, although they paid out more than what the analysts were expecting. But that is probably because the result is weak. That's what Australian companies are very good at. We pay more dividends because we need to smooth the pain a little bit. Yep. The guidance is very uninspiring for the year ahead. Again, below what the market was positioned for. That's why the share price has to go lower. Yep. I think the key word in today's announcement is delinquencies are on the rise. And I think that's why you have to be a little bit careful. Yeah.
But are they buying the debt books cheaper though, as a result of what's happening?
No, I don't think so, because it has increasingly become a US story. You see on today's announcement, they obviously started off in Australia and New Zealand, but that's not a big mode anymore. They're almost running it off here. Yeah. It becomes a US story, and there is fierce competition in the US. Right. So it's not just that we get more books available. It's not that they're the only ones buying them. But there is competition there. And Macquarie recently rightfully pointed out, if you pay attention to the competition, they see a growing number of non-performing loans. Right. Now there's only a question, at what point does that turn up in their books as well? Yeah. So I think the risks are still there, with a very uninspiring outlook for management right now. Yeah. I think you can wait here. Okay. There's no hurry to get in.
So would you sell it if you're in it?
It depends on what your horizon is. They still pay a dividend. They still think they can grow. It's not like all of a sudden it's a pile of rubbish. But it's just a company that I think at this point in time is a little bit struggling to get growth going. If you're in here with a longer term horizon, this company in times performs quite well. It is one of those non-large cap stocks that often performs quite well. But I think this point in the cycle, I'm a bit more cautious. Also because I think the situation in Australia is only going to get worse. I think. So I would say, if
you
you're not in there,
hold
don't
or-
go there. If you're holding it, just think what your strategy is, and otherwise just move on to greener pastures.
Oh, okay.
But just a quick question for Rudi there. I mean, how does delinquencies not rise at the moment when we've had years of central banks handing out free money, and that's sort of stopped the last year? So they should be rising here right now. And obviously the debt markets have been everyone's flush with cash. So there shouldn't be too many bad debts, which there haven't been. And now we're starting to see a shift in the cycle. So looking forward, Rudi, shouldn't this be good for Credit Corp here over the longer term?
Well, over the longer term, yes. For the time being, I think for the shorter term, not so much. That's why.
How does the market look at these things? The short term or the long term?
Well, you can tell on today, the market is always very short term focused. Otherwise, the share price wouldn't fall
They're
by
a bit
15%.
skittish. All right. Good discussion.